Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this is for Tuesday, the 17th of January, 2023, just getting on to 6 p.m. Central Time. Nice to be back. Was in Puerto Rico, never been there, loved it. Very beautiful colonial area on Old San Juan. And of course, once you leave the city there and you go into the other sections, at least the ones I was in, my gosh, you could be in any American city. Remind me of Collins Avenue, actually in Miami, part of it, as you're in some of the areas there. Very beautiful. And by the way, the airplane, every seat taken, they brought back older planes. I was looking at it because having been a single engine pilot at one point, I was saying, how old is this plane? It's got to be 25 years old. It was like brand new, don't get me wrong. And it's because they can accommodate more business class, first class, 4.5-hour flights. So that's what it is. And you saw how the United Airlines earnings came out. They were very strong today. Not a surprise to me at all. But we're talking here about the markets and we're talking about earnings. We've had a big rally ever since Christmas where the market has gone up almost nonstop. And the question, of course, the traders have to ask themselves, did we get ahead of ourselves? Are earnings going to be really that good? We saw a mixed bag today hit between Goldman Sachs, Morgan Stanley. We saw after the markets more earnings coming out in other companies. And the question is, are we going to start seeing where the market starts rolling because these earnings can't stay as good as they are? Or have we gotten down to some PE ratios in these stock indices as a whole where the market can say, I can afford the break. We had a good rally. We've gone up about 4% coming into today in a lot of the indices since the beginning of the year, and we can give back some of that. That could be the story. I'll be watching with great interest the metals in the morning. We're going to be getting the Bank of Japan coming out with their information. We have Beige Book tomorrow, National Association of Home Builders. We got API numbers. We got just a host of information. I mean, a real lot of it. So it's going to be one of those rock and roll days where we get everything through there. Energy markets are higher, as you can see. Bonds and notes fairly stable at this point. While I was gone in the grain markets, we had the USDA reports, and they looked to me pretty bullish for the corn and the soybeans overall. When we look at the dollar index, holding here at the 102 level, but we have embedded readings in a lot of the currencies, and in some of the metals it's developing. That's not bearish. That's bullish until those readings are lost. When we look at the S&P, as you can see, the market has been up very nicely since the beginning of the year. Now, we fell back today nearly 0.5 percentage point through the opening tonight, which is Wednesday's trade. You can see how you've come back. When I left, I made a statement, and I recall it. I said, you've got a trading top and a trading bottom. I wonder what will happen. You haven't really gone that far away. You're about at the midpoint, a little past it on this rally from this low back up to the difference from this high to there. That's how I'm viewing the market. When I look at the swing lines, they are in an uptrend, higher lows, higher highs. I was only gone 3 days or so, the 11th up until this weekend, and I put out for my subscribers all their updates. And we did climb, and each day made a higher high. This is the first little break we're getting, and it makes sense. This is your 200-day moving average of close. It's a natural resistance point. On the other hand, you're getting a bullish crossover trying to develop right now where the 18-day average in red is just getting over the 100-day average. That's not a bearish event. That's a friendly event. And it means on pullbacks, that 3,900 level, probably a support zone. We also got up to the 4,000 level in the futures markets. And, even money numbers are often a difficult event for the market. And I think that's what you're running into. Then you couple it with where the Bollinger Band is. And one of the things you'll hear me say often, real often, is the first challenge of a major moving average, and a 200-day moving average of closes. That's major. It's almost a one-year average if you think about it. With the combination of the Bollinger Band, often is very difficult on the first run for the market to overcome, and that's what I think you're fighting. In addition, you're overbought. Overbought means the slow stochastic readings have gotten over 70, but they haven't gone sideways over 80 for several days or more, which they have to do to convert from overbought to what I call embedded or locking in upside momentum. You didn't do that yet. You haven't done it in the NASDAQ, and we have a similar picture there. If you look at the Bollinger Band and the 100-day average, you rallied right up into them, and away you go. Then we take a look at the Dow. Now, you'll hear traders saying that because the Dow was the leader on this whole rally, the rally in the other indices is typically not sustainable, that the market will pull back, and historically they're correct. You want to see the larger indices lead the way up, not the narrow 30 stocks that make up the Dow. That is not the right one up there. In any case, the market has come up. All the key moving averages are down here, the 100 and the 200, the gray and the green. And we had a reversal to the downside today, getting followed through. You could easily fall back to that 18-day average to regroup. Wouldn't surprise me at all. Then when we talk about the Russell, this is the first move like that, right over the 200-day average. You haven't seen that in a long time. Each time you've hit it before, you got there and you got thrown back pretty fast. This is a little different this time. More strength being seen. Now, here's what I'm going to be looking at as well. Are we going to start getting where the 18-day average can get over the 100 and the 200-day? That would be a bullish event. What about embedding through here? Well, in order to embed, what we've got to see the market do is back off a little bit. And by backing off, what I mean, and let's see if we can get this to come in, where both numbers get at least 3 days, finished days, where both numbers are over 80. So Friday you had one, today you had one, but we don't know what tomorrow's going to hold. So you're in an overbought status, looking to see is the market ready to convert and get even more bullish or not in this particular index. In the VIX cash, I think the pros went short. Some calls as you got down to the first challenge of the lower Bollinger Band, both on Thursday and Friday. You're getting a bit of a bounce. I think their goal's 21.11. You're not embedded. I still think they're on the right side of that. Generally, the market does come back and make those game challenges. In the bond market, what do you do the first time you hit a Bollinger Band and you're not embedded? So long. If you haven't taken my enhanced Bollinger Band course at iraepstein.com under education, learn to get this tool into your tool belt. It is just a phenomenal tool to work with. It changed my life in trading dramatically and how I teach trading. So I think you'll learn a lot from that. 10-year notes did the same. So I think the pros were coming out of these markets. And I think one of the things you're looking at is, February 1st isn't all that far away. That is when the FOMC meeting is going to take place. We've already seen numbers that have happened. Now the question is, do we get labor markets that weaken or not? Without weakening of that labor market, I don't see how the Fed doesn't go more than one more interest rate hike. They need to get that. In addition, while CPI has slipped back, and I mention this while we're on the dollar for a lot of reasons, while CPI has slipped, it's still got a 6 handle. And the government's looking for a 2 handle on this. That's a long way. Agreed, it is coming down. But I'm also looking at where it's coming down from, what's making that up. And it's of concern. Keep in the back of your mind, we're getting ready for the spring markets. The seasonal studies typically in gasoline start going up from about a week from now. You're in that time frame, well into the March time frame. So the market doesn't wait for the driving season. It makes the shift way ahead of time. Well, that's going to cause some problems. It may not be core CPI, but it's going to be headline number if it starts climbing. And headlines drive emotion. You've been running the lower Bollinger Band, what I like to refer to as a gorilla glue trade. They often end up with an embedded reading that would be bearish in this case. The flip-flop would be if you can get the eurocurrency to stay up. It's already tonight flirting with getting close to losing its embedded reading. If it does that, then we can get more of a correction, dollar up, this down if it loses that reading. I think tomorrow's going to be a super important day. The Bank of Japan comes out now, it'll be late tonight when they come out and tell us what their monetary policy is. It could be a market mover, so pay attention. The market is so, how do I put this? The yen is so involved in cross trades, financing of different things, that if that market moves out, it can create some havoc in the short term. In the British pound, with all the strikes and everything going on, the market up. Now, it appears that they're making excellent headway between the European Union and the Brits in trying to reach a trade accord. I think that's very important. Now, if I had a bet with you, that's why this market has come back up. The market is realizing that, and they're looking at it, because you can't possibly tell me, with all the strikes going on, that is good for their economy, with their inflation the way it is, and so on. Bitcoin, straight up and away. Before I left, I said this is a pretty important area. You were basically in a market that just was like this before I left town. And what I had said is, now you're winding up in here. Which way is it going to break out? The market often just turns around. Well, what it did is you had day one of a breakout and day two. This is a classic breakout, the way that I teach charting. And I would be looking then for the higher numbers, and it's exactly what you got in that. Why? Because now you've worn the bear out. That's basically what happened. Do I think this market's ready to pick up and run? I don't know. I know that I wouldn't want to be bearish. It's going to take an awful lot of bad news to get this market back under here. And what can do that? I mean, the companies that had trouble, it's past tense now. They had their trouble. Those that had to close their doors, closed their doors. And now the currency's taken off again, if you call it a currency. In the Brent versus WTI oil, you can see how the market had come down, gotten into that 450 range, and it just added $1 difference between the two. Now, OPEC came out with today a bunch of projections, and suffice to say, they are looking for demand not to worsen in any manner. They're looking for it, if anything, to slightly stay stronger this year, maybe weaken a bit next year. When you take a look at Brent, we are up to a key resistance area of the upper Bollinger Band, which you haven't hit yet, but you just hit the 100-day average, and the resistance between 86.12 and 87.96, the upper Bollinger Band, probably going to be the next area that the market has a bit of problems with. It is overbought. Wouldn't surprise me if it wants to get a pullback, but I don't see anything that's super bearish on the chart. In fact, similar to the Bitcoin that I just said, look at the sideways action. What's going to drive this market down? You'd have to get a full-fledged, serious recession, and there's that battle that as long as labor stays strong, it's really going to be hard to get a serious recession. You can get a recession, you can get a slowdown, yes, but if people can get jobs easily, if they're making a good living, it's very hard to take demand out of the market. The Fed knows that, and this is the quandary they're in right now. The same has to be true of WTI crude. You can see how this market has come up, fighting its battle between the green line, the 100-day average, the upper band. Neither this nor the Brent are embedded. When we take a look here, this is heating oil. I thought I had fixed that, but apparently I know what happened. I had to call in an old one of my supports. I can just see the prices. That's not going to be the crude. But you can see what the market is doing there into the resistance. That's heating oil, folks. I'll have to make that change. And in that gas, where's it going? You've got one of the mildest starts to a winter we've had in a long time. Now, we are going to get some of that storm track that was in California coming across the Midwest and so on, but it's not super cold weather that's coming with it. It's more precipitation that's coming with it. The market's not budging on that yet. The big question is, does the market have it within it to get down and challenge the Bollinger Band again, or is it just going to narrow in right here? That's really the question that traders are going to be stuck with asking and getting an answer to. But as you can see, down a little bit again tonight early on. Now, I want to remind you that my morning futures videos really show you what's going on. At 5:30 in the morning, I start recording. I post around 6 o'clock in the morning or so, just after that. I review what reports are coming out, what's happened overnight. We build trades together, if you will, or the charts, because I'm recording what's on my screen in real time, and then showing you how the chart setups are coming. I'll jump between daily charts and weekly charts often. On the weekend, I'll jump between weekly charts and sometimes go back to a daily chart because I know a lot of you like longer term trades and the weekly charts are naturally that. How do you find out more? It's so simple. Simply go to our website at iraepstein.com. Under the word research, it's all there for you. We'll try to put a link up. We've had problems with getting them up here. It's not us, it's the software people that do this for us, and we'll see if they can get, if we can manually put the links there. If so, just move your cursor to the top of the screen here if you're on your PC. Give it a click, it'll take you right to that area. In the meantime, I'm Ira Epstein. Good to be back. Good trading to you.